Hey, this is Mike Swanson, Wall Street Window. Today's financial news in the morning was dominated by the biannual testimony. This is the first time this year of Jerome Powell to the Congress, his outlook on the economy, and people were widely anticipating him to make statements on interest rates, which he did. And those statements uh, suggested that rate cuts are not coming soon. Now, you would think this was a negative. You would think that this would drive stocks down, but instead, the stock market went up, gold went up, silver went up, and even the crypto market went up after you saw a 10% crash or drop in the price of the Bitcoins yesterday. So what's going on? Why is what should be bad news? Why doesn't the market care? Because I want to show you that there's a misperception in a lot of people's talk about the Federal Reserve and interest rate policy and the financial markets, and people are more worried about these things than they should be. In fact, what Jerome Powell is really doing is creating an environment that explains why the market is actually going up as much as it has. He's essentially put a put on the market. That's what people said in the 1990s about Alan Greenspan. There's an Alan Greenspan put where if the market were to drop, he would cut rates. He did that in 1998 simply to bail out a couple of hedge funds. And now we have inflation that's not gone away. We have an economy that's not in recession, and the Fed is talking about trying to lower interest rates, but can't lower them now. So let me get deeper into the details about this stuff uh, with you here, and it'll make sense to you. So here's the headline today. This is the Axios website, how they're interpreting the news. Their headline out of Powell: don't expect rate cuts imminently. Well, before Powell spoke, he put out a statement, and it was posted on the Federal Reserve website. And in it, he says something that is so important to understand that is goes way beyond this headline. So here's him talking about the current economic situation. Now, look, I can't. I'm not going to read it for you. I'm going to link to it in the video so you can read the entire thing yourself. I always want you to have access to the information I have access to, so you understand where I'm getting it. I'm not just spitting things out and saying things on YouTube here. So he said this sentence that is so important. We expect that our rate, that our, now remember, they were raising interest rates for 2 years, and he makes this statement. We believe that our policy rate is likely at its peak for this tightening cycle. So what that means is everything. It means that the Federal Reserve is telling you, we're not raising rates. Inflation has not gone away, and we're not raising interest rates. The stock market fell in 2022 and 2023 as the Federal Reserve raised interest rates. And he's telling you right there, we're not raising interest rates. That's why the stock market has been rallying. And then the very next sentence, the very next thing he says is, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. Now, as the year began, there was expectations among market traders and people on CNBC and so forth that they'd be lowering rates by now, that inflation would actually be gone completely, that it would be down to the 2% so-called target level that the Fed has talked about. And it's never reached that. It still hasn't reached that. And so they didn't lower rates in the market at the very beginning of the year. It was clear that they were going to lower rates in January. The market fell like 4 or 5 days. And that's all people talked about and thought that was going to be the story of the year. And the stock market would go lower. And it did not happen. The stock market did not go lower because in the end, the most important factor is not whether the Federal Reserve lowers interest rates next week, next month, or 3 months from now, but the simple fact that they're not raising rates and they're not going to raise rates anymore. And they're telling us that. That's been the biggest thing, the macro factor this year so far, the simple fact that the Fed's not raising rates. Now, they are paved the way to lower interest rates, and you can look at the odds of when this is going to happen right here at the Fed Fund futures that are trading the odds. And the odds are 95% that they will not lower rates, that they'll keep rates where they are on the March 20th meeting. That's the next meeting. The May meeting, odds are basically 80% that they won't make a change. In January, the odds were that they would be cutting rates in May. That's shifted. In fact, there's a chance there better than 50 chance of doing it in March. That's diminished. Better chance that the odds of May are now 80% that they won't. It was like 80% they would. Despite the shifting odds, the stock market has gone up anyway. You could have thought to yourself earlier this year, oh, this is hawkish. The Fed's not lowering rates fast, not as we expect. No, it doesn't matter because they're not going to lower, they're not raising. And therefore, the next move is going to be a cut. Now they're saying 30% chance in June. I don't care if they do it in June or don't. They could decide not to because inflation's not going away and there's no sign of recession. If those conditions continue, rate cuts are not justified at all. But are rate hikes? I would say they are, but the Fed's already telling us they're not going to raise them. I'd say they're justified because the stock market is at all-time highs. Bitcoin's exploding, showing us there's rampant speculation going like crazy, just as there was in 1999, 2000. Internet stocks when Alan Greenspan put a put on the market, and they're basically doing the same thing now, telling you they're going to lower rates if the stock market drops or anything negative. They're lowering rates. I don't care how much the market goes up. We're not in a recession. You know, if you were in college and you read economics textbooks, they would tell you that it's appropriate for the Federal Reserve to lower rates for when there's recessions. Well, they're just talking about lowering them anyway. At some point before the year's over. So that's why the stock market doesn't care that they're not lowering them imminently. That's why it's not hawkish, and that's why the stock market keeps going up. Because in the end, we are in an easy money situation. Interest rates really are not high enough. Not high enough to stop inflation, not high enough to stop the stock market from rallying, not high enough to stop the rampant speculation in the crypto market and elsewhere that you can see signs of. And in 1999, all this led to disaster when the bubble bust. And eventually this bubble is going to bust too. I don't think it's going to happen, in the next month or two. I think the market may rally for the rest of the year. I think Bitcoin can keep going up, but the day will come when Bitcoin will top out and crash. The day will come when the stock market goes back down. The day will come when the U.S. debt explodes thanks to all these easy money policies and government spending out of control in Washington, D.C. And when that day comes, you are going to want to be in gold and silver. And that's why I've been saying the simplest thing to do is be a silver stacker. It's just simple. I can talk about buying mining stocks, which I do. I can talk about investing in gold, which I do. I can talk about doing other metals and all sorts of other trades, which I do. But if I want to boil down to one simple thing, one simple takeaway that I can tell anyone, and you could tell anyone, it's be a silver stacker. What would you rather do? This is 10 ounces of silver. It costs about $250 to buy it. Would you rather buy this, spending $250, or spend $66,000 to buy a virtual crypto coin that all you can do is see on your phone? The very fact that I can ask such a question and the price disparity between those two options tell you how rampant the speculation in the system of financial speculation, the growth of the money supply is out of control. That's why inflation has been running wild and why it's crazy times that we're living in. Everyone knows that. So if you want more comments like this from every day from me about what's going on in the markets that day, hit the like button. If you want my next video update, hit the bell and hit the alert button next to the bell, or hit the subscribe button, and then hit the bell. And then you get the alerts from YouTube as soon as they're up. And look at those $100 bills behind me. There was a time when $20 was worth $100, and before you know it, in 5 years, $100 will be what $500 is now if things get worse. Hopefully that doesn't happen. Maybe the $100 will just be worth or it'll take 150 to make the 100. Hopefully that, or maybe 120. Let's be more optimistic. But either way, if we're going to the point where $100 bill tomorrow is worth 120 today, this is going up at a bigger rate than even that will in the next couple years to come. So that's my takeaway for today, and I'll be talking with you later.